All right, so welcome once again, ladies and gentlemen, to La Prinzo World Academy. Today, we are going to be talking about four important rules for success in trading. You need to master this. I'm going to demonstrate, I'm going to give you illustration on these rules, how you can apply them. Before you start trading, you must have this in place. You must have this in place before you can start trading. Number one is your stop loss. Where are you going to put your stop loss? The other day we spoke about, I told you about support and resistance, how to draw support and resistance. Now, after drawing the support and resistance, after drawing the trend line, where are you going to put your stop loss? So let me give you an illustration. You must know where your stop loss is. If you don't know where your stop loss is, then you don't have a trade. All right, you must know where your stop loss. You must know where I'm going to put stop loss because the trade may not go your way. It's not all the trades that are going to be profitable. Not all the trades. For instance, I have an illustration here. This is a trade here. Let's say you've been watching this trade. All right, this market obviously is an uptrend. Now, if you are to buy this market, let me remove all these things. All right, this market obviously is an uptrend. So let's say here, if you're monitoring this market and you wanted to buy this market here, where will you put your stop loss? First of all, let's go to our lower time frame to see the trade. All right. So this is the trade here. When the market approaches your trend line, one of the things I teach here is allow the market to break out of your trend line and then retest. Or you have what they call double bottom. It's another strategy I use. Double bottom, meaning price should, in the case of this, use lower time frame to see the market going up and then come back to retest that zone. All right. Maybe let's say you are taking a trade from here. Let me go to 5 minutes time frame. Okay, so this is the resistance. This is the resistance line or the trend line that price has touched, right? Now, when you see a market behaving like this one, you can use triple bottom, double bottom, or breakout and retest. They all works perfectly. So if you're using triple bottom meaning market goes up, it came to retest a zone, it goes up again, it came to this one is triple bottom. But double bottom also makes sense, meaning if you have a key level drawn, those of you are used to drawing support and resistance. If you have a support and resistance drawn very well, all right, you've seen that key level. And this is the place we are talking about here. You see that this is it here. Let me go back to the 5 minutes time frame again and see if you have seen a key level where market turns. Okay, this is the according to the 5 minutes time frame. You see where this market has touched. This is like a level for this market. So if you see market approaching a key level and you're expecting to buy that market, as you're expecting to buy that market, the first thing you should think about is where will I put my stop loss or how is my entry going to be? For the entry here, for instance, this one here, you can use this strategy of double bottom or double top. If it is a sell, if it is on the resistance, it's going to be a double, it's going to be double top or W or M shape. But on the support level, it's going to be double bottom, all right? Sometimes even head and shoulder on the resistance or inverted head and shoulder if on the support levels. So in the case of this example, the market got to this point. If it gets here for the first time, it's not the best time to buy. The first touch is not the best time to buy. As I observe this market, most of the time, the second touch here. Market come back to touch this place again. Now, the first touch, you draw your support level. Maybe this place is key support level. You already drawn it before now. Market touch here. You must not buy that time. Allow the market to touch here again the second time. All right? Or the third time. But second time is still fine. If you see the market coming to touch this place as a second time, maybe you miss this one here. And the market comes back again to touch again. After this particular candlestick here, this one here is your confirmation candlestick. This one. After this is your confirmation candlestick. This 5 minutes here is your confirmation candlestick here. All right. This is bullish engulfing, meaning the market, this candlestick is bigger than this one here. This shows that the market may likely go to the upside. So where will you put your stop loss? At this level, your stop loss is going to be below here, below the zone. All right. So you know, before you place the trade, you already know where to put stop loss. If you have a trade and you don't know where to put stop loss, that means that trade setup is not valid. You must have a stop loss like this. Today, somebody showed me an account and I discovered that he had $500 in that account, but now the $500 is almost gone. When he screenshot that account and sent to me, I discovered that the guy does not have a stop loss. He was buying, he was selling. He was selling V50. He was selling V50. I don't know why he did not have a stop loss. The market went against him. As the market was going against him, instead of him to get out of the trade and look for buy opportunities, he didn't close the sales. Now the sale is going on. The next thing he did was to buy. All right, was to buy. So there was no stop loss. He didn't allow that state. He didn't allow that particular market to take him out first from the sales. Instead, he started buying and allowing the sales to run. That is the wrong way of trading. You are edging. You are edging the market. Edging sometimes is just for a few minutes. Maybe you know that the market is going to retrace from here. All right. And you buy. Market, instead of going up, started coming down. If your money is not enough, you can edge a little while just to make sure that the account is not blown. But I saw him, the trades are, the buys are far long. I mean, the sells, the market, instead of just here, the market was supposed to just take him out. If he had bought, maybe the stop loss is just a little bit above the entry, but now it has gone very far above the entry. There was no stop loss. Instead of taking out, take the sales out and start buying, you allow the sell to continue running. That is not the best way to trade. It's not the best way to trade. So you must know your stop loss. Like for this trade, for this example, if I buy from here, this is my stop loss. Here is my stop loss. So you just come here, put your cursor here. There are numbers. This stop loss is 860.07. 860.07 is the stop loss. Now, the next thing is take profit. All right. Now, the first is the entry. The first is the entry, rather. The entry is what I've just spoken about. The entry, you can use this pattern for a key level. Support and resistance levels. If you use this double top or double bottom pattern, meaning market is on a key level and then it gives you a W shape. It gives you a W shape. Once market is approaching this level, the best thing to do, I'm going to give you another example again. The best thing to do is to look for a W shape, meaning price leave that place, come back to retest that zone again. The second time or the third time, the W shape is when you come for the second time. That is your entry. You take an entry after, for instance, here, this is the confirmation candlestick. That is your entry point. I'm going to show another example. Then the next thing is your stop loss. Where will you put your stop loss? So once you have seen where you put your stop loss, let's see another example again, how to enter the trade. So I'll go and look for this V50, V275. Let's do for an entry and stop loss for this trade as well. Those of you are still having issues about entry. Okay, let's see this V. Now, if you look at this is a daily time frame. The first thing you should do is to use higher time frame to see the direction of the market. Higher time frame to see the direction of the market. All right. And first of all, also know if this market an uptrend or a downtrend. So if it is an uptrend, you look for buy opportunities. If it is a downtrend, you look for sell opportunities. So let's say you have a market that is buying or selling. So let me use, for instance, so let's use this as an example. Let's say this market has been selling, right? This market has been selling. This daily time frame. So let's go to a lower time frame to look for entry for this market, for a sell entry, because you know that the market is selling. All right. Now, this is another. Look at this. This is a resistance level. How do I know? Based on this 4 hour time frame, you see the market come here to retest. Once you see a market trending, look out for, if it is a sell, if it is a downtrend, look out for where it will pull back, and the pullbacks always happen in support and resistance zones. So look at this trade now here. You can see clearly that market came here to retest this zone. So how do you now enter? How do you now enter? This is different from the trend line strategy, all right? But this is trading on zones. This is trading on zones. So we can use, like here, if you look at it, that the market is ranging in between these two zones. All right. So look at the strategy that I'm talking about here. This place is ranging. This place is ranging. This is ranging market. Let's look for where the market is not ranging. Let's look for where the market is not ranging. Let me look for where the market is not ranging. I want to show you. Okay, now, like now, you see something like this on a clear zone. When you see market on a zone like this, all right, it's a downtrend. You already know the market is downtrend. Look at this one. Market came down here. It came back to retest this. So this is what they call double top. It came down again to retest. This is what they call triple top. All right. Most of the time, you can take a trade if you come back to test this zone. And if you take a trade from here, let's say you take a trade from here, as the market touches this place, as you have clearly identified the place as a zone, make sure you identify the place as a zone. Your stop loss is just above. All right. Make sure you're using a lower time frame for entry, lower time frame like 15 minutes or 5 minutes. All right. Like this again. Look at it here. This is this is see here. This is also another double top scenario here. The market got here. All right, it's a downtrend, but it came back to test this zone. First time, it came down to test this zone. The second time, all right, this one even up to 4 times. But if you want to enter this trade, if you enter this trade from the second turn to, it's still valid. But if you miss this one, maybe this is a triple top. All right, so if you place a trade here, let's say you sell from here, your stop loss will be above. If you have something like this in the past, maybe you have not seen these ones. If you have something this kind of week back here, make sure that it is on lower time frame and your stop loss is above. All right, it's above this entry, and then you take profit. You take profit because of what has happened here. Your take profit could be in the next zone. You take profit like here. Are you seeing? Then if you are buying, for instance, you are buying, look at this place again, because this place is a zone. If you are buying, if you are seeing a market, like this is a W shape. Look at the market was coming down. It got to this point, it went up. It came down again to test that zone. All right. This is your confirmation candlestick. This one here is your confirmation candlestick. Or this here, this one here is your confirmation candlestick. In this scenario, your stop loss is here below your entry. All right, below your entry, and then your take profit is probably here. Are you seeing? So this is entry strategy I'm giving you right now. This entry strategy works. If you can spot out this double top, double bottom in a market, know the market direction. Sometimes if the market is buying, if you just spot out this market direction, if the market is buying and you do not start from the beginning of the buy, once there is a pullback, the pullback happens to most of the time on the. That's why you must know how to draw your support and resistance. Knowing how to draw support and resistance, knowing how to draw your trend lines is very, very important. You can add this to the breakout and retest strategy we are trading already. All right, there is no permanent strategy. I'm just teaching this strategy for you to learn as well because it still works. There is no permanent something that works. Try which of them is best for you. Breakout and retest is good. You can also try this strategy. Always think about what is the market trend. Is market buying or selling? If it is a sell, this is the selling market. Once you have a selling market and you have drawn your support and resistance, once price tests that zone, all right, give you if the price was to turn from this zone, it means that it will just break it out and go. But if it didn't turn and give you a double top, which is like M shape, it means that you can quickly sell and take your profit in the next zone. Let's see if we can have another double top scenario here. This is also a double top scenario. This is also a double top scenario here. Price got to this point, all right? Then price came back to test this zone. In fact, it touches 3 times. Here, it's also a confirmation. When price get to this point, you can now this is 15 minutes time frame. You don't have to enter with 15 minutes. Go to at least 5 minutes time frame. Your confirmation candlestick should be a candlestick that will give you bearish engulfing or pin bar. All right. If you see something like this too, it's a sign that market may likely turn from here. So what do? You sell from there. All right. You sell from there and then put your stop loss above. Put your stop loss above. In the case of this one was a triple top. So we have bottom top, double top or triple top. Here is a triple top. So if you miss this one here, all right, you can sell after this candlestick form. This is also a confirmation that the market may likely turn from here because it's supposed to break out and keep going, but it didn't go. This is a triple top. This is also a confirmation that the market is going to sell again. So when you sell from there, your stop loss should be here. Then your take profit should be the next zone. Like here is the next zone. Your take profit should be the next zone. Except you really understand that the market is a buy, it's a long sell. You see, most time the triple top or double bottom happens on a key trend line or support and resistance. If it happen on a key, like here, this is a support and resistance level, and it's also a trend line. So if it happen here, the trade is very, very valid. Here, because here is a support, it's a resistance level, and it's also the trend line of this 4 hours trend, all right, that I have drawn so far. So if it happens here, then it's a great setup. How many of you understand what I'm doing right now? Are you getting what I'm saying? Please, if you get what I'm saying, can you type 111? The next we are going to talk is the courage to hold your trade. You've seen how, okay, good. So go and practice this with your demo. Look out for market trend. Is this market a trendy market? Is it buying or selling? Like this is a downtrend. When you see a market in a downtrend, don't rush. Always wait for pullback to happen. Pullback usually happen on these trend lines or the support and resistance. When the pullback, a pullback is when the market is buying, selling, it comes back to a support or resistance level. That is a pullback. If you come back there, look out for double top and double bottom. This is like here we have a double bottom here, double top here. Here too we have double top here. If you look at this place too, we have double top here, and it's also almost a key level. Here too we have double top here, like M shape, like M shape. It happens here. If I go to smaller time frame, you will see the obvious. Here too, this is all M shape. It happens all here. You see, with 4 hours time frame, it happens. So if you see it here, double bottom, double top happening in a downtrend, then you sell. But first know the direction of the market. If you know the direction of the market, you trade in that direction. Look for double top or double bottom, or you can also call it M shape or W shape. For the downtrend, for the downside, it comes as W shape. For instance, here, this is like a W shape. If you go to 15 minutes time frame, you'll see how. Okay, let me give you an example. This is a W shape. If a W shape is happening on a key level, remember key level, it has to be on a support and resistance level. If it's not happening on a support and resistance level, then it is not valid. Here is a W shape or double bottom. If you see this in a trend, in the buy market, you are seeing that happening, pullback happening on those kind of levels. That means you are going to buy because the market is uptrend. If this market is an uptrend and the market, sometimes you can even buy, but it's not going to go against it, buying against the trend. That amounts to just taking too much risk. The best for this strategy is buying in direction or selling in direction of the trend. If this market is an uptrend and you see market coming to form a W shape in this key level, that means you are going to buy the market from here. This is W shape. In 15 minutes, you have to bring it down to lower time frame, like 15 minutes and 5 minutes to see the W shape happening. Like here, this is also a valid entry from here. This candlestick is this one here is the confirmation. So what do? You put your stop loss below. So your stop loss is not much. Then look at the movement. Market goes all the way up. Your take profit could be the next zone. If you are a scalper, the way you define a scalper, if market is trending, let's say you're a scalper, you're using 15 minutes and 5 minutes, you should know that in those scalping scenarios, downtrend can be identified with 15 minutes. Like now, this is a downtrend. According to scalping strategy, this is a downtrend. Right? But also use higher time frame to see the overall direction. So that when you scalp in direction of the overall trend. This is a downtrend. So if you're a scalper, you can identify these key levels with 15 minutes time frame because there are many times you see them many times in the market. Even with 15 minutes time frame, look at them, they are everywhere. As a scalper, you can get these key levels all the time, even as a scalper. So the next is your courage to hold the trade. When you sell from here, most times the take profit is the next zone, but sometimes we just close our trade because we see few dollars. Let's say you buy here, the next thing you close your trade here, and market get all the way to the next zone here. Let's see our next zone with the higher time frame. Okay, let's say you buy here. All right, let's say you buy here, and then the next zone is here. So instead of you to take your profit in the next zone, you just close it prematurely. Then after you close, the market now go in your direction. It will be very painful that you close prematurely like that. So know where to enter, know when to enter. I just taught you how to enter. Double bottom, and double tops on support and resistance levels. How many of you understood what I just said? Trade in direction of the trend. If the market an uptrend, first identify the trend of the market. Once identify the trend of the market, look out for pullback to all these key support and resistance level. You can use like 4 hours time frame to spot out these key levels, all right? Spot out these key levels and then wait for market to get to those points and give you double top. Like here is a double top. This is a selling signal. It's a double top. All right, here is a double top. It's a selling signal. Here is a double top. It's a selling signal. Double top or M shape. Then the downside, when it gets to support levels, if market is a buying market, allow the market to pull back to support levels or W shape. Once you have those W shape, you buy the market. Don't just buy because the market is on the level. Look out for W shape, which is double bottom, or M shape, which is double top with smaller time frame. 5 minutes is okay. 15 minutes also can give you a good double bottom or double top to take your trades. And then you combine with candlestick formation. That way you can know when to buy and sell. Then take profit. You must know your take profit level. Where should I take my profit? Your take profit should be in the next zone. Let's say if you buy here, take profit is here. This is the next zone. All right. If you sell on this level here, your take profit should be here. This is the next zone. Or if you're a swing trader, is when you can think about, okay, I'm going to hold, but you should know the direction of the market before you hold. Because sometimes if you're holding, before you know it, the market will come against you. So make sure that if it is a downtrend, you already know that this market is a downtrend. I'm going to hold this market to a particular level before you buy and before you hold it to that level. Otherwise, the next zone is your take profit level anytime you buy or sell. So, any question? Anybody have any questions so far? Is there any question? Is there any question? Is there anybody who does not understand what I explained? This strategy works. Go and practice with your demo, right? Practice with your demo and come back and tell me if it works or not. So if you combine this strategy with your mindset, if your mindset that will control your decision, your mind will control everything. Your ability to overcome fears. Practice this strategy on your demo and say it, and then overcome fear. Don't be afraid. When you place a trade, don't be afraid. Look at this double top. They're everywhere. Everywhere you find double top, double top. But the best, the one that even are even more valid is when you see them on your trend line. Like trend line like this, yeah, it's a very strong signal for you to sell. So guys, is there any question? Anybody have any question? Any question? Any question? If anybody who have any question to ask based on what I've explained so far, your entry, your stop loss, 4 things you must have before you place it. Your entry, know where to enter. Next is your stop loss. Where am I going to put my stop loss? I've shown you how to place stop loss. Next is your take profit. Where am I going to put my take profit? Then 4 is the courage to hold your trade until it gets to your take profit. Don't prematurely close your trade because of fear of losing the profits you already make. If you have a trade that is running, allow it to hit your take profit. Because most times, if you have a stop, most times we allow the market to hit our stop loss, but when we are in profit, we don't allow the profit to go hit our profit. We close it. If you are doing that, you are going to be losing a lot, keeping a lot of money in the market. So take note of these things I've just told you so far. All right. I'm sure all of you are clear with this I've just explained. So if you are clear with this explanation, it means that we've come to the end of today's presentation. On Wednesday, we're going to have another training. Go back. Those of you who have the academy on you, with you, always go back to the academy and learn. It's not just the weekly training that will help you. The academy videos are also there. Even if you don't have physical training, you can always go back to the academy and watch the videos over and over and over and over. You will still get the results you're looking for by watching those videos. So thank you so much, everybody. Thank you, MC. All right. So we'll see you again on Wednesday. I wish you happy trading. All right. Thank you too, Jennifer. I wish you happy trading and goodbye for now. go practice your skill. Use demo to practice the skill, the strategies I've just taught you. You can use your phone to analyze this market. I usually use my phone. You can use your phone to spot out all these things and then practice it on your demo account. And then don't be afraid. Be courageous enough to fund your live account and apply it on live account. Then see how profitable you are. Combine this with the other strategy we use, breakout and retest. You can use this on forex pairs. I'm going to be teaching you. We are going to be doing forex trading on Friday. For those of you who are not trading currency pairs, you can also apply this strategy on currency pairs. And remember, you can use your Deriv account to still trade currency pairs. So if you have Deriv account, you already have opportunity to trade for currency pairs with Deriv. Very, very, their spread is very good. So use it to trade currency pairs. So guys, thank you so much, all of you, for coming. I'll see you again on Wednesday. Bye for now.